think it's probably the opposite of youth and inexperience. It's probably aged and intransigent. It's kind of like why our government is so messed up right now. It's a bunch of, septuagenarians and octogenarians.
Hello and welcome to the Daily Crypto. Today we have Mark Yusko as he talks about the current state of the crypto markets and how the increasing economic indicators signal an oncoming recession. Cryptocurrency has frequently been promoted as a panacea for all ills, including inflation, low interest rates, a lack of buying power, dollar depreciation, and so on. Those benefits were simple to accept as long as Bitcoin continued appreciating, seemingly uncaring of other assets. Indeed, like other risky assets, cryptocurrencies fell after the Fed stated in November 2021 that it would begin reducing its bond purchases and suggested that higher interest rates were on the way. Interest rates have risen in 2022, and the big question now is how high interest rates will be. On the other hand, with a strong fundamentals-backed economy, investors with long-term investment periods may find this an ideal time to get some quality assets at bargain prices. Having said all that, let's head straight through the video. Remember to like and subscribe if you enjoy the content we produce on this channel.
To generating profits. You have to pay salaries and you have to pay taxes and you have to buy stuff to convert it into other stuff. So 70 is the number. But we've convinced ourselves that because of this anomaly that happened in 2000 and again in 2007 of easy money raising that number up toward the 130, 140 is, 100 is the level. No, it's not. And you can say, we're companies are more efficient today and we're more global. I'm like, but both of those are going the other direction. Globalization is going down again. Efficiency is being challenged by higher input costs. So we are way overvalued. And actually, I was on TV, maybe 10 days ago or so. And they're like, aren't tech stocks getting really cheap again? I'm like, no. They're still 1.5 to 2 standard deviations expensive, right? They've only been this expensive 8% of the time.
Yeah.
8% of the time.
The collapse of the Terra ecosystem, which depegged its algorithmic stablecoin Terra USD and plunged it to an all-time low of 30 cents, has placed doubt on the future of not only algorithmic stablecoins, but all stablecoins in general. Although stablecoins are a link between multiple decentralized financial ecosystems, the Terra fall caused significant volatility in the decentralized finance industry. Celsius, a cryptocurrency lending platform, halted withdrawals on June 13th due to harsh market circumstances in the current bear market. Reports quickly surfaced that the business was experiencing financial troubles and may be on the verge of collapse, potentially putting consumers' cash at risk. While the move to restrict withdrawals and transfers may have surprised investors, the problems at Celsius and its ambitious ambition to create high returns had been simmering for quite some time. With inflation reaching new highs each month, and the Federal Reserve's increasingly hawkish stance, the U.S. economy faces an increased risk of an imminent recession.
We're talking about runs on the bank in crypto. We're seeing literally digital financial services companies, you can't call them banks, closing their doors. Literally, the run on the bank, everyone tried to get their money out of Celsius and they closed the doors. And we've all seen the movie It's a Wonderful Life. If you close your doors, you're done. It's over. You have to keep the doors open. And what did George Bailey do? He took his own personal money and he handed it to depositors saying, how much do you need to get by? Because your money's not here, right? It's in this person's house and this person's house. That's what banks do. They lend the money out. And he had Mama Dollar and Papa Dollar at the end at 6 o'clock, but he did not have to close his doors and he survived to fight another day. And that's the way it works. And so I think 3 this week, right? Celsius last week, Voyager this week, Babel, there was another. You close your doors, it's over.
However, the COVID-19 recession, which began in February 2020 and continued until April of this year, positively impacted cryptocurrencies. It raised Bitcoin to a record high of over 28,000, and more importantly, made investors and Wall Street companies take the largest cryptocurrency by market capitalization seriously. But if Mark Yusko is right and the U.S. economy falls into another recession as early as next year, leverage allows you to get started with less cash and the possibility of larger profits.
I believe this is a 1937-esque policy mistake. 1937 policy mistake, turned a garden variety recession into the Great Depression. And, the 90-year cycle says this is going to happen. The 90-year cycle says that humans do stupid stuff, like really stupid stuff every 90 years. And I don't know why. I have to go back and really understand. It has to do with generational cycles and, just inexperience and youth. And although, Jerome is not young, but it's just, this is bad. And I think it's probably the opposite of youth and inexperience. It's probably aged and intransigent. It's kind of like why our government is so messed up right now. It's a bunch of, septuagenarians and octogenarians, and people just get less pliable, less adjustable as they age. And that's, hate to say that, but it's true. And this, 1840s, bad depression, 1930s, bad depression, 2020s, again, I'm not predicting it per se. I'm not wishing for it. I don't want to be in a depression. Trust me, I do not. But man, all signs are pointing to just really bad stuff.
However, leverage combined with the current market volatility and downturn might result in fast liquidation, especially if you trade with 1-to-100 leverage. Therefore, always trade with prudence and risk assessment before using leverage.
Bitcoin has only been this cheap 4% of the time in its history relative to its fair value. So again, that doesn't mean it has to go higher from here. It doesn't mean it couldn't go lower. But statistically, probabilistically, one asset is in the 4th percentile cheap. The other is in the 92nd percentile expensive. It's just nonsense.
All effective traders employ leverage and take varied risks based on the opportunity. However, it would be best if you only utilized leverage when there is a no-brainer opportunity in the market and you are confident in entering the market with a larger stake. With the increased urgency consumers feel during inflationary periods to stretch their money, and in a bear market too, banks can either scale back their rewards programs to boost their bottom dollar or compete through more attractive rewards programs and attempt to poach clients from other banks. According to a survey, 25% of U.S. customers used credit card points to pay for necessary products and services, and 62% of those polled said inflation had prompted them to modify how they use their credit cards in the last year. Last week, the Federal Reserve raised interest rates by 75 basis points or 0.75%. This is the biggest rate hike in 28 years, and it is part of an ongoing effort to curb inflation, which has disrupted the economy and markets, from equities and bonds to cryptocurrencies.
Borrow from Citadel Securities to short stuff. Why would you tell your largest competitor what you're short so they can squeeze the heck out of you? I've never understood that, but Ken's a genius, one of the smartest people I've ever met, absolute monster, moneymaker and innovator. But we are there are some other covenants to these deals that are very sinister. We have to get the word sinister in for Sinister Saturday.
According to the Federal Reserve Board, the federal funds rate, which commercial banks can borrow or lend in excess reserves overnight, will rise from 1.5% to 1.75%.
The thing that's so disconcerting to me is the policy tool doesn't fit the problem, right? What's the problem that we have, right? Oil prices went up way too far, way too fast. Okay? So that's most of the quote unquote inflation. used car prices went up way too fast. Again, probably another third of about half the inflation numbers are in oil, about a third are used car prices, and there's a little bit of other stuff. And so how many rate hikes are going to cut the price of oil? None. I mean, no impact on oil. It'll make demand go down. This is not a demand problem. This is a supply problem. We don't have enough supply. Saudi could fix this tomorrow, theoretically. They say they have all this spare capacity, but they choose not to. Why do they choose not to? I don't know. They won't even talk to the president. The president really, really, really wants Saudi to make a big, announcement of more production, but they won't even talk to the guy. So I thought they were supposed to be our best friends and allies. I don't know. It's kind of a weird dynamic.
Higher rates have already begun to affect stocks, cryptocurrency, commodities such as gold and oil, and various other assets in 2022. But what can investors expect from this point forward? And how long will the rising rate environment influence markets? Comment down below, and don't forget to like and subscribe. This is the Daily Crypto. We'll see you in the next video.